Markets have been on a roller coaster this month, record highs, a sharp sell-off on October 10th, then a bounce as earnings surprised. Bitcoin also saw a big shakeout. In this video I'll explain what happened, why, and what to watch next, with dates so you can follow the timeline. Quick roadmap: 1. A short market snapshot. 2. The October 10th sell-off and why it happened. 3. The rebound led by earnings and policy commentary. 4. What happened to Bitcoin and why. And 5. What to watch next, including the late October Fed meeting. Let's dive in. As of mid-October 2025, the broad picture is, equities rallied through the year and reached fresh highs in early October, but markets experienced a sharp sell-off on October 10, 2025 that created volatility. After that shock, stocks recovered over the week of October 13 to 17, 2025, helped by stronger-than-expected corporate earnings and comments from Fed officials that left room for an eventual interest rate cut at the end of the month. On October 10, 2025, markets experienced a notable sell-off. The immediate triggers were a combination of stretched valuations, especially in AI and tech names that had pushed indices higher, and a pullback as investors digested rising downside risks to growth and credit. Media coverage that day highlighted worries about overexuberance and a rapid unwind of leveraged positions, which amplified the move. After the October 10th correction, the market recovered into the week of October 13 to 17, 2025. A big reason was corporate earnings. Several banks and chipmakers reported stronger-than-expected third-quarter results, which helped financial and tech sectors. For example, on October 15, 2025, the S&P 500 closed higher after positive results from major banks and renewed optimism in chip stocks tied to AI spending. Another driver was FedWatch. Comments from Federal Reserve officials in mid-October signaled that a measured rate cut was possible by the October FOMC meeting at the end of the month. The FOMC meeting is scheduled for October 28 to 29, 2025. That prospect of easing helped risk assets recover because lower policy rates typically reduce the discount rate used to value future corporate profits. Bitcoin followed risk assets higher into early October but then saw a sharp drawdown around October 10, 2025, the same date many equity markets were hit. Crypto markets tend to be more volatile and react strongly when global risk appetite falls or when leverage is flushed from the system. Analysts who reviewed the mid-October move described it as a leverage-driven sell-off combined with thinner liquidity, which made prices fall faster and deeper than during calmer periods. Despite the October 10th drop, some institutional analysts, for example from Galaxy Digital, argued in mid-October that the crypto structural bull market remains intact because of tailwinds like tokenization, stablecoin growth, and long-term interest from institutions. But they also warned that the near term could remain fragile while leverage and liquidity normalize. Why did stocks and Bitcoin move similarly? 3 reasons. 1. Risk-on/risk-off flow. When investors reduce exposure, both risky equities and crypto get sold. 2. Leverage and liquidity. Both markets had stretched positions and thinner liquidity, so forced sales created outsized moves. 3. Policy expectations. Central bank commentary and possible rate changes shift discount rates and risk premia for all risky assets. A few other dated items to keep in mind. On October 20, 2025, China kept its loan prime rates unchanged for the fifth straight month. That's important because China's policy and growth data directly affect commodity demand and regional markets. Also, investors are watching China-US trade developments since any escalation or easing can quickly change sentiment in Asian and global markets. Here's what I'd watch next, with exact dates: October 28 to 29, 2025, FOMC meeting. Markets are pricing the possibility of a rate cut, and the Fed's language and projections will matter. Weekly U.S. data releases in late October and early November. Employment, CPI, these influence how quickly the Fed moves. Keep eye on the Fed H.15 releases for short-term rate data. Ongoing Q3 earnings. More banks and tech firms will report through late October and early November. Surprises there will swing sentiment. Crypto liquidity and regulatory headlines. Those can instantly widen or tighten Bitcoin volatility. To summarize, markets had a sharp correction on October 10, 2025, then partially recovered on stronger earnings and the possibility of Fed easing in late October. Bitcoin also fell sharply on October 10, primarily due to liquidity and leverage factors, though many analysts remain cautiously constructive over the medium term. Key dates to watch: October 20, 2025, China policy headlines and data, October 28 to 29, 2025, FOMC meeting, and the flow of earnings and macro data through early November. Thanks for watching. Hit like if this helped, and subscribe for more.